Unsurprisingly, growth-sensitive and commodity-linked currencies have been hit the hardest during this crisis. That's not a surprise because we don't know when lockdowns are going to end and how deep recessions are going to be. What we do know is that governments and central banks have acted quickly to prevent an economic shock turning into a financial crisis. Currencies that were hit hardest have started to make a comeback. You can see things like the Norwegian krona and the Australian dollar falling anywhere between 10 to 20% have started to make a comeback. Looking forward, we can see greater discrimination emerging in foreign exchange markets, and we want to make two key points. Number one, as conditions slowly return to normal in the dollar funding markets, we think the dollar should continue to hand back some of its recent gains. However, the currencies performing the best against the dollar should be the defensive currencies, things like the euro, the yen and the Swiss franc, which do well during recessions. Number two, given the depths of the impending recessions, it seems unlikely that commodity currencies will be able to reclaim all of their recent losses. If we look at a currency like Canada, we have oil prices forecasted by a team to drop to $20 a barrel in late Q2, and with the Bank of Canada potentially starting quantitative easing, we see dollar Canada moving up to retest the recent high and perhaps even making a new one. Over the last 4 to 6 weeks, we've seen an indiscriminate sell-off of currencies, a bit like the baby being thrown out with the bathwater. Going forward, we're going to be looking at a more selective, more macro-driven FX environment, and we think there will be differentiation between the defensive currencies and the commodity currencies which will be driven by the slowdown.